Hello traders, it's Samurai Trader here, giving you an update on two markets today. We're going to be reviewing some live trades on the Enqueue, the Nasdaq 133 tick, and we're also going to be having a look at some trades that I took on the YM on the Dow 89 tick. One of the things I get asked regularly, why do I trade different tick charts on say the Nasdaq compared to the YM? Well, you have a much lower volume on the Dow, and that's why I tend to find that the 89 tick chart works really well on the Dow, and I really like the 133 on the Nasdaq. Just remember, of course, at times the market will move that quickly that I don't have a chance to get in on a trade, and you'll quite often see marked up on the charts, market move too fast, etc. The other thing is too, you'll see that I took 6 winning trades, and 3 of them were on the Nasdaq on the NQs, and 1 was on the YMs, and you'll see they're all around the same time. Never forget risk management. I never risk any more than 2% of all of my open positions at any one time, and that's particularly relevant when you're trading correlated markets. So I do have a rule of a maximum of 2% risk. So where I do execute two trades at the same time, I'm within my risk parameters, which is really important. A question I also received a couple of days ago was, do I use anchor charts? Well, I do, and as an example on the Enqueue, I want to say I use them, I'll just see what a higher time frame is doing. Now if you only have one computer screen, or you find that it's just too busy for you looking at multiple screens, just put a longer term moving average on your screen. And as you know, I have an 89 and a 200, so you might go even higher than that to give you an overall trend direction. But I love using the Andrews pitchfork as an example, and I'll draw in channels and trend lines, but it's a guide generally speaking, because I trade lower time frames and I'm into scalp between 11 and 13 ticks generally speaking. I tend to find I can almost stick and not necessarily refer to a higher time frame because of the longer term moving averages that I have on the chart. So the more experience you get, you may choose to look at a higher time frame just to have an overall view. I love the Andrews pitchfork, but once again, that means it's another tool on your screen, and it can get very busy and difficult at times. Now in today's video, you'll discover some of the world's best trading strategies, and as most of you know, I've been a trader for over 20 years now, had my own R&D teams, and we still design trading systems. We're launching very soon WeTradeForYou.com, where we will be doing automated trading strategies for our clients, etc. However, nothing beats the eye of a human, and as a day trader, my experience is so far you have a much better return on capital than say using an automated strategy. And we have some great automated strategies, and some of you have seen some of my videos and even attended my workshops in the past. So using the human eye is still a lot better than using some computer program. Now I'm going to be showing you a number of trade setups today, and never forget what Confucius said: the person who chases 2 rabbits catches none. And you hear me say this every day: become a master at 1 or 2 setups and focus on those, because we have a thing called ego depletion, and Robin Sharma talks a lot about this. And if anyone hasn't heard of Robin Sharma, or you haven't looked him up on YouTube, please do. He's probably one of the best motivational and personal coaches out there in the world today. Very down to earth, and a lot of his information is based on scientific facts, and very important. For an example, just recently I was listening to him. He was talking about gaining and developing a new habit, and the University of London has finally proved that it takes 66 days to install a new habit, whereby it's easier to do and carry out that habit than not carry out that habit, or to break the habit. So in other words, it takes 66 days to hardwire a powerful habit in. So it's just he's just outstanding, this guy, what he covers and what he talks about. But getting back to this statement here, so likewise, when you're looking at multiple markets, And even looking at an 89 tick on the Dow and the 133 on the Nasdaq, it is very difficult to trade both of them in busy times at the same time. It truly is. Now remember, my goal per contract is $200 per contract per day. Typically, as you've seen me do, I usually get that over and done within an hour. I think I had a much higher goal than that today, which I achieved, and I think it was still over in an hour, as you'll see in a moment. But the point there is, I'm focused, generally speaking, on one chart, and that's what I want you to really do, is to really stay focused. So there is so much conjecture here, and so every expert in our business has an opinion on which way the market's going in different names. But basically, from my point of view, the market's either trending and trend continuation, you've got trend reversal, divergence and reversion to the mean, and you've got breakouts. And that's where my 12 trading setups come into, because I've got a setup that'll basically trade all of those. But as a newer trader, and even an experienced trader, if you trade with the trend and if you're patient, that is where the big bucks is. Once again, become a sniper, become an expert at one trading style. You see, trading doesn't have to be complicated. Trading is not rocket science. Now, I teach what I believe to be simple and profitable. Well, I know they're profitable, and you know they're profitable. You watch me trade live, but they're fairly simple. Getting back to a newer trader looking at the charts, you may say, wow, they're very busy. But look, after a few weeks, you have what I call an aha experience. That is, after watching me trade, or watching my videos, or having my coaching, and this is something I have when I coach my clients. I have people virtually every day say, aha, now I get it. After 1 or 2 hours of one-on-one coaching on Skype and GoToMeeting, traders are generally up and running, particularly if they're experienced, very quickly, and they have what I call an aha experience. Now I get it. Anyone can master the art of trading if they put the time into it. Now, as I say here, I'm jumping ahead of myself here. For further information on my fast track traders coaching program, trading strategies, or live room, please email me directly at trader@I am a day trader. By the way, it's where I'm recording this, it's 11:37 a.m. I've been up since 2 a.m. Trading and coaching, so it's been a long night. Please subscribe also, of course, to my YouTube channel. Now, getting back to Robin Sharma again, and I just wanted to mention this because I personally believe everyone needs to have a compelling future. As Robin says, dream big, start small, act now. So what I want you to do is to really look at, why are you trading? Because when you've got a compelling future, a big future ahead of you, and there's some real reasons why you should learn how to trade correctly, and I just love what he has to say there. And very quickly on this is, I'm not saying you're going to do this well, and this is, by the way, looking at Forex here, but I expect you to do this well. But to have a goal, now this is based upon a 10,000 trading account. If you've only got $1,000, we'll build from 1,000 to 10, and then you can do this. Now, based upon a maximum of 2% risk per trade, by the way, generally speaking, I like to see you risk no more than 1% when you're starting off at maybe 2, but the smaller the better. But starting with 10 and you're trading minis based upon only 20 pips a day, or if you're trading futures $200 a day, you can see within a year you're earning $14,000 a week. Now that and by the way, your account has grown to $236,000. so there's big money in what we do. So learn how to trade correctly. Take your time, treat it as an apprenticeship or internship, because if you don't learn how to trade correctly, you're going to lose your money. And let's not forget this, there's a lot of other very smart traders out there. This is a zero-sum game. I can give you the tools, I can give you the strategies and the techniques, but you need to take action and implement them. So once again, any questions, please email me. Now we're going, don't jump off yet, we're now going to look at the charts. I've got a lot to cover with you today. So what we're looking at here is the Enqueue to begin with. This is before I took the live trades, but I just want to give you a rundown on some trades here. Now, counter trend trading, is a much higher risk trade. You are going to have a lot more failures when you're counter trend trading, but I'm going to mark them up. But new traders, forget it, don't even consider counter trend trading. So I want you to actually ignore the trades I took today. They're all winners, but I think when we get to them, I can't remember now. This is yesterday's chart, sorry, and you'll see my with trend trades today. But focus on trading with the trend, and we can see here the white candle here. These are T1 and T2 signals, and we can see here we've got our 89, that's our cyan, and we've got our 200 EMA. So winner, you still would have been in this trade here. This is nice little winner here. Generally speaking, by the way, traders, on the Enqueues, I want to tuck my stop 2 ticks above. Okay, so I want to put it 2 ticks above the high here, my little swing highs or swing lows. Now, as I mentioned, quite often I'll look at my anchor charts, and I actually may have a larger stop. And I think actually on one trade here I did, because I'll look at my anchor chart and I'll see my trend lines and my price is right at the trend line, so I might have a 4 tick stop, but I keep it within a certain parameter. But if I never have my stop exceed my profit target, so let's just say, for example, if I've got a stop of 14 ticks, my minimum target I'm after is also 14 ticks. So down here we had a few divergence trades. You can see a platinum, a lower low. Now this ticked down by only 1 tick. Remember, I mentioned I always like to have my stop 2 ticks below on the 133, but actually ticked down 1 tick below, so you still would have been in this trade here. Now remember, when you see divergence trades, the further away you are from your moving averages, that is, the more angulation you have, the more accurate they are as a trade. So we can see here this is off a double bottom. We've got a and this is a good signal of a change in trend, at least in the short term. Notice here I've got a higher low here, okay, or so you can see that there it's broken that little pivot there. And also here, see my paint bar here, that tells me I've got angulation up here that I've got at least for the short term. So I would expect either a bounce off the 89, we can see here it shot straight through, or off for 200, which is exactly what it did over here. So let me scroll along. So we had a 200 bounce here, we had a pivot trade here. So basically we've come down, gone through it, bounced off the 89, come up, you see the trend is still down. We can see our 200, we've bounced down, and you can see these bounces here. We've got a little divergence trade there. Notice here from there to there, okay, so notice the paint bar is higher than this point, giving me a short-term change in trend. And notice our long-term stochastic is coming up. We had the same in reverse happening here. This is what we call the T10. So a T10 is a money on the floor shot or trade. You can see we've got a falling long-term stochastic. The short terms come up, rolled over. Same here, we've got a long term has gone up, short terms come down. They're an 80 to 85% trade. They're a fantastic trade. Then what have we got here? Another what have I got here? A 200 bounce. Traders, you know I love the 200s, and you can see you bounce right off the 200 there again, and we come on down. So moving right along. Okay, then we've got a lovely T19. Now T19, I've got two T19s, an A and a B. An A is an ideal one. Now that is where I've got dropped down below the zero line, yet I've got a higher price. Now notice here that I've also got angulation. You can see I've put this trend line in here just to point this out. See how the price has gone away, then it slingshots back down again. This is also what we call a T89. Notice how price action is well out of the channel. It'll always come back to the channel. So I've got a higher price, a lower low. That's just a 19A. It's a perfect divergence trade for me. Then we can see the black line here is a pivot. I've got a pivot bounce, an 89 and a 200 bounce. But we're also heading into a danger zone, and I've also got divergence because I'm getting lower highs here. And when we tend to get these lines all diverging here, and as I say here, do not trade when you have all these three converge, because generally it's a very choppy area. Wait for the breakout, and this is where being a sniper, a trader as a sniper comes into it, wait for that breakout. So we can see here we had a T1. This is our re-entry. We've gone up there, come down. Why wouldn't you take that as a divergence trade? Well, you don't have divergence here on the platinum, but we do have a bounce and up it goes. Here we do have divergence, a zero line. This is what we call a T19B. We don't have what I call two hills. It's come straight down for a zero line cross. Experienced traders only. Note the angulation again. Notice the difference, how we've got that wedge formation. Here's the 89 going up. Price action is moving well away on an angle, then it falls back down again. So we'll move right along here, getting back in this converging. And down here, by the way, we had a pivot bounce. We had a T19A. Notice, by the way, how I call them two hills. See, you come in, come down, form another little hill, and away we go. T2 was there, perfect T2 slingshot trade. Once again, easily fulfilled your 13 ticks. And what you want to do on these trades, by the way, traders, is to what I call front run them. You'd have your profit target just above your pivot. Even though it pierced through, you want to front run, and sometimes you might only get 11 ticks out of it because expect a bounce off your pivot. Nice little double top heading down, but then you're heading into chop city, so you're going to wait again. Here, if you had a higher or a larger profit target, your target may not have been filled till down here anyway. Had another pivot bounce, and let's go along and look at some of my live trades. So I took a T89 here. I entered on this candle, and this, you'll see this happen all the time. Why did I wait? Why didn't I jump here? Well, generally I'm waiting for my zero lag to roll, and you still wouldn't have seen a zero lag roll to here. But what I want to, but these usually, you'll see this happen all the time. It'll come down, come up, test it again, then start to collapse. That's where I entered, I should say, the trade. And I was after, what did I say here? 10 ticks by 10. Sorry, that's 13 ticks. That should be. My apologies, traders. Or did I go? No, maybe it was 10 ticks. As I said, this is yesterday's chart. No, it was 10 ticks. The reason it was is I was front running here the 200B. That's why. So on both of these trades I had two entries. Now this actually ticked up 3 ticks higher. Now remember earlier I mentioned my stop is generally 2 ticks above. On my anchor chart with my pitchfork, I had a trend line running right above here. So I was above 4 ticks above here, and I think it was a 13 tick stop. Now as I mentioned earlier, normally if I got a 13 tick stop, my target is a minimum of 13 ticks. However, I was front running at 200 because what do I expect to do? I expect a bounce, which is exactly what happened. Now I then re-entered another trade. Now remember the risk parameters I spoke about? Well, I took another trade here and I bounced off the 200. So I could have got another 3 or 4 ticks out of that trade, but once again I prefer to front run. We came up here, I had a lower high, I call these T11s, and I took another short. I'd already banked it on 2 on the YM. I had similar trades in this area, and I exited here. Now on this particular trade, and I was kicking myself later on, I actually only got out with 4 ticks on this one, so I got 10 ticks on each of those, and I had very similar trades on the YM as well. But I front run these. Why? Because of the 89 and the 200. But we also had something else coming up. Well, it was 345 in New York. That's right. Now if I had stayed in, would have, could have, should have, I would have easily got my 13-14 ticks out of that particular trade. But why did I choose to exit with only 4 ticks profit on 10 contracts? TradeStation plots my trade entries here, my exits, was because of the time. At that stage, just looking down here, it was close to 4 p.m. The market goes a bit crazy at 4 p.m. generally speaking. You never know what it's going to do, in my opinion. So I always get out 5 or 10 minutes before 4 p.m. Here it's just before 6 a.m. my time. That's why I exited the trade, and this moved 4 p.m. here. This moved within seconds, the 4 p.m. move. So that was 3 winners there. Then on the YM, and we'll perhaps do a recap on the YM very shortly and have a look at that. Here Let's quickly go and have a look at this morning's action. Now once again we can see here some once again bounces off. When you got these things on the pivot, you basically, we're going sideways here, stick with the trend, winner, nice little divergence trade there. We had a 19, now this is a 19B, nice divergence here on the platinum, but and that's right, this is why this is during coaching we're marking these up. This is a bounce off a pivot. When you've got divergence and a bounce off a pivot, this really dramatically increases your win-loss ratio. So when you got divergence and multiple signals at pivot levels, they're generally really bankable trades. And what have I got down here? All right, this one here was a bounce off a pivot, but you still would have been in short here. But you've got to be very careful when you've got these entries. You've got no room to move here. And down here, what have we got? We've got a 200 bounce. Remember I spoke about the 200s, the 89s. They're a great trade. Now we're going up to test it after the third or fourth time. We finally burst through. What's another signal here we're going to go through? This one here, look at my long-term stochastic falling here. Look at now, it's rising, and this is what we call a money on the floor trade. See how my short terms come up, flicked up, our long-term stochastics going up, and up we pop and we go through. So we had just some fantastic trend trades after that, and look at all these. Look at these. We had some beautiful then divergence trades, but I just want to go along here and point out a couple of things with my own trades here. So on here, we're running out of time. We're 21 minutes into this video, so I don't want to spend too much time on it. Let me just I'll quite often draw up channels, particularly if I'm coaching. I'll just show how I draw channels, but we get bounces off them all the time. Now here, notice here I've got a lower high. When I get my paint bar on a lower high, this is a really good indication I'm going to have a change in trend. We can see here I've got plenty of room between the 200 and the 89, so I shorted here for 13 ticks. I had a stop of 2 ticks above, so I had a stop of -10. This is 13 ticks. I took a second entry. Why? Because I had a lovely little double top off here. Experience tells me the market is going to fall. Once again, staying within my risk parameters of a maximum of 2%. I had some other shots on the ES. We won't go and look at those today, we're out of time. My stop here, by the way, with my entry and 2 ticks above there was 9. So I had 10 contracts, 10 each of them achieved, and got out basically 1 tick difference there at 13 ticks. Now down here I had a losing trade out by 1 tick. Now in this particular trade, I come down here, we fell down, we had great divergence and basically a triple bottom formation here. So I went long right here. Now time of day, now one thing I'm very aware, it's 5:51 my time, getting close to 4 p.m., 9 minutes to 4 in New York. I should not have taken this trade. I should not have taken this trade. I thought the market was going to move fairly quickly. Once again, the market has no room for my opinion or your opinion means nothing. Trade what you see, not what you think. Let me say that again. Trade what you see, not what you think. Your opinion means nothing to the markets. So I've got in, and this action here, this was a good 15 minutes going sideways, and the comment I put up here is time is not on your side. I like to see movement. You want to see the trade going in your trend direction. Otherwise you have what we call indecision in the market. That's not what you want. You don't want indecision. And so I ended up exiting this trade just before 6 p.m. Just before 6 a.m. my time, 4 p.m. New York, get these times right. Out 10 contracts out, -1 tick. Now woulda, coulda, shoulda, as you can see there, it ended up I would have been filled, would have got my 13 ticks easily here anyway, eventually. But for me the risk factor is too great, because you never know. And look at this here, this just went sideways for a good 20 minutes, and I don't like that at all. So that was a divergence. So I stopped out -1, had those. The ES was very kind to me this morning. What I'm going to do, I'm going to put this on a hold. I just want to bring the YM over. I'll just bring the chart over. It's on another window. I'll just put this on hold a minute and bring it across. Okay, so what we're now looking at, traders, we're looking at the YM 89 tick. 89 tick to me on the YM is just it trades really well. Your stops are usually nice and tight, and because you've got lower volume to the Enqueue, as I mentioned earlier in the video, on the Enqueue I usually go for 133. On the YM I like the 89. It's a great technical traders market. That is, you don't have too many institutions trading this particular market. It's too thinly traded, so it's great for those people like you and I that like to use our indicators and our trend lines, and or even pure price action. Now let me quickly mention this. I love pure price action. I have a trade set up called the T25, and actually I should do a separate video on that one, where the only thing I use on the T25, and for those of you that are with me when I trade live, I do T25s on the ES every day, which is purely price action trading with moving averages as a trend direction. And the T25 means a 2 to 5 candle pullback trading in the direction of the trend. But anyway, getting back to this, the 89, some lovely bounces off the 89 here. We remember with the Enqueue, a point is 4 ticks. A point here is 1 tick or $5. It's a beautiful market to trade, and this is looking at yesterday's price action, by the way, not today. So we can see here we've got a lovely little divergence here. What makes this so sweet? It was a beautiful bounce off a pivot, paint bar, pivot bounce, divergence, all roads lead home. Then I have a lower high plotted here, little resistance here on the 89, as you can see, but you should have been in on this one. This is a slightly higher risk trade, but where you get these lower highs, you've had great angulation. These are a fairly high probability trade. Then you head into what we call congestion here, Chop City. You've got a convergence of a pivot line, the 200 and the 89 coming down. So you would just want to wait and see here we kept in a downward trend and popped down it went, a higher low. Then let's have a look at a couple of trades I took here. I took this one here. This was this is a T89. Notice here that I've moved well out of a channel. My entry is out of a channel. These are what I call T89s. This did tick up. I took a bit of heat here against 1 tick against me here. My stop in this particular case was actually 4 ticks above, and I got out and I had a secondary entry. Why? I had a beautiful divergence trade. I had a double top, 0 line cross, a T19A, all rolled into one, and I front run this particular trade above the 200, and look what happened. I got out here 13 ticks, beautiful, bounced off the pivot, up it went again, then we had a lower high. Now this particular one I got in late. I actually should have been in up here. I had a lower high, as I mentioned. I love these trades where I get the paint bar where it's a lower one, lower high. Now I've got a comment here. Look at the anchor chart. I was training at this stage when I put this in, so I just remembered here. The anchor chart showed that we had a beautiful trend line coming down, and that's another reason why I actually took this one. And now I remember why, just looking at the chart above. I had a downtrend here and I entered it because of what I was seeing on the anchor chart. I front run this because I said struggling against the 89 and 200 plus a pivot front run. So I got out here, and sure enough it bounces up, then it eventually goes through. Note I'm just looking here, note high or low on the platinum. Here we go, here possible divergence also. So here I only got out with 10 ticks instead of 13, and away it went. Now yes, woulda, coulda, shoulda. I could have hit my profit target here. Now what's interesting, just looking at here, it actually come down here, and I can't remember why I didn't take that there. Now I remember. Okay, I'm looking down here at the time. Another thing, reason I was hoping to get my 13 ticks, I was going to let it run, but I looked at my time down here and I got out. So that's why I decided to front run this, struggling against the 89 and 200. So I bounced off it, took a bit of heat, went up above, come down, bounced again, decided to get out. and away it went. And then we had the 4 p.m. move. So traders, that's the end of recap. It was a couple of great trading days. Once again, trade with the trend. Become a master, become a professional at one form of trading. So for further information on my fast track day traders coaching program, or if you haven't subscribed to my YouTube channel, please do. And I look forward to giving you a recap soon. And okay, yes, got to go, got a phone call coming through. Thanks traders, cheers.